Hey, what's going on YouTube? So today I'm going to share with you my terrible dividend investing portfolio. Now, I've had this portfolio for almost 3 years now, which is pretty crazy. And I want to share this with you. So we're going to jump on the computer screen here and we're going to kind of break this down. So if you haven't been following along, this is my dividend investing portfolio here. I call it Dividend Dentist as well because I do enjoy dividends. But I'm going to explain to you today why this is a terrible dividend portfolio. Now, you can see here our current value is $64,223. It's been a pretty rough couple of weeks right now in the market. And so I want to share this as well too because I think it's important to not only show the good times but the bad times in the market as well. So as you can see, we're currently at the time frame of 1 day, so we're down about $648 in a single day, which is pretty crazy to think about because I was just recently watching an old video from my other channel where I actually was starting to share my investing journey and then made it to this channel, so that way they were separate. But I was looking at some of the changes that were going on in my portfolio then, and it's pretty crazy. I might even try to bring up the video if I can remember. So if we switch over to a week, this is also pretty insane. So we're actually down almost $3,800 right now. Obviously, that's unrealized gains right now, so just kind of something to keep in mind. And then if we go to the month, we're down about $2,700, and then if we go to the quarter, we're down about $1,800. Although we did make $170 in dividends, so yippee yay right over there. And then if we go to the year, we're still up about $5,400 with about $500 in dividends earned. And if we go to our all-time with the gains here, we're at 9,436 with almost $760 in earned dividends. Now, for those who more so care about the, I'm like dragging stuff around here, who care more about the unrealized gains entirely, not just the money weighted returns, you can see we're up $7,653, which is about 13.5%. Now, the reason those two numbers are different, just in case you're not as familiar, is mainly just for, things that I might have sold off a couple weeks or months or even a year or two ago and kept that money in the portfolio. This is kind of just showing those numbers still added to the total because I did earn those gains. And if I have sold things for a loss, that will be included in those numbers as well too. So for us, we've obviously earned a decent amount so far. Now, as far as, let's go back to, where is it, like the month. If we go back to the month, just to kind of break this down a little bit, you can see these different sectors right over here that I have, and you can see which ones are kind of taking the biggest hit over the last month, which, by the way, if you don't know this platform right here, I'm using M1 Finance. This is the one I personally love to use. I feel it does the best job for what I'm trying to do, which is long-term investing and dividend investing, even though, again, we're going to go over why this is a terrible dividend portfolio. But if this interests you, if this looks really cool and you want to try them out, I will have a link for you in the show notes down below. Help support out the channel. You get more free content just like this, plus you get a nice little bonus as well. And if you're very curious, I do have my main channel where I do teach you how to utilize the platform too, so you can definitely do that. But if we take a look here, you can see some of the different areas where we're taking the biggest hits. I think we're in the month. Let's go back to the quarter. Yeah. Well, actually, let's do the month, and I'll show you the quarter as well, too. So you can see right now our retail is taking the biggest hit as far as a percentage. That one's gone down 8.39%. And as of that, Costco is actually one of the biggest hit percentage-wise. And then you can see here, dollar-wise, they're all fairly close within about $300 to $400. We have like Ross and Home Depot both down pretty significantly as well. But that's just kind of showing you when the market's down. Obviously, if we go to our all-time, we'll switch that over. Our Ross portfolio or our Ross stock is actually still down pretty significantly, but Home Depot and Costco are up. So that's kind of keeping this sector doing well. I'm still planning on keeping Ross long-term, even though it's not doing well right now. What are we at? $99 a share. I purchased at $112. So definitely taking a big hit there. But why is my dividend portfolio a terrible dividend portfolio, especially at the current, total right now with it being $64,223. Now, really quick, before we continue on, one thing I do love to mention in my videos is my partnership with Earnest. They are a company who helps you refinance your student loans entirely for free. It takes you just about 2 minutes to figure out if your interest rates can actually be lowered to save you thousands of dollars over the course of those loans. And pretty much if you click that link in the show notes down below, take that quick survey, see if you can save that money. Not only will you help yourself in the future and actually be able to have more money in your pocket to invest more, which is one thing you can do, or whatever else you want to do, you actually get a little bonus for using that link, and you help support out the channel so you get more free content just like this. This is why I have a terrible one. So if I go to my research tab and go to my stuff here, I'm going to show you what my dividend yield is right now. So this is just my regular dividend yield, not my yield on cost. My yield on cost is actually higher than this because some of the dividends I have increased since I've had ownership of them. So that's always really nice because I'm getting paid out more. But you can see this dividend yield is 0.993%. And the reason for that percentage, which if you're not too familiar with dividends, a lot of companies or a lot of people with dividend investing try to aim for 3 to 4%. So I'm like way below the average there, like way below. So if we go back to my portfolio and go to my holdings, you're going to see right over here, based off of value, obviously this is how much the company's gone up, but I can even go off cost basis too, and it'll be relatively the same. But you can see some of the companies at the top over here, like Apple and Microsoft, obviously do pay dividends, but their dividend yield is fairly low in comparison to companies that are paying 3 to 4%. Home Depot is kind of the outlier here. I think they're closer to like that 2.5%, if I'm not mistaken. But then you're going to see some really big impacts with why my dividend yield is so low. We have Airbnb, Tesla, and Google, all three of which do not pay a single penny in dividends, at least as of right now. That can change in the future, but that's probably unlikely anytime soon. But I do plan on holding this portfolio for a long time, and if that changes, great. If not, I can always sell them and buy into other companies that do pay out dividends. But again, this is why this portfolio is a terrible dividend portfolio. And then we also have Ross right over here too. Very, very low dividend. I think it's less than 1%. Same thing with Costco. Even when they do special dividends, which helps their overall dividend yield, it is fairly low. And then we also have Amazon, doesn't pay a single thing in dividends. Same thing with Facebook. Visa's very, very low. And then we also have Square, or Block, I guess they're called now. And that one also does not pay a dividend yield too. So there's only a few companies that pay a fairly decent dividend yield and also have decent increases in their dividends on a regular basis. Actually, a good chunk of the companies I have do increase their dividends at a nice rate, sometimes anywhere from like 5 to 8%, which is great. But when you're starting with a dividend yield like Visa, like let's go see what Visa is right now. Let's switch over to Seeking Alpha. Let's go to Visa just to kind of show you here. So Visa's current dividend yield is 0.7%, which is really low. So, you know, you're paying for a share of $214 and you get 38 cents. So you're getting like nothing back. But they do increase their dividends by about almost 18%. So that's pretty nice, but not going to do a lot for you when you have very little of it. So I want to show you. So if we're going to just do a quick numbers thing here. So let's say we did get 4% on the $64,223. Well, 4% of that is $2,568 in dividends. Essentially, it would be in a year. So if we divide that by 12, obviously these are just rough numbers, but if we divide that by 12, it'd be $214 you would be getting essentially every single month. And I'm going to switch over to my dividend tracker, which I actually put together. This is just on a spreadsheet to keep track of how much I've actually earned. FYI, if you are interested in checking this out, I will link it down below. It's entirely for free. Essentially, if you're clicking on other links in my bio or descriptions, this one is free for you, and it just helps get you this extra content right over here. But what we're going to see here is, let me actually clear that up. You can see right over here, let me get my marker. Let me zoom in a little bit too, because I think that might help us out a little bit here. I'm trying to remember how to zoom in here. Okay. So if you could see here, just the best month that we've had so far was in December of 2021, which was $81.94. So obviously nothing close to that $214 plus that we could have been making if we were focused on a 4% dividend yield. Now, obviously I have other goals and focuses that I'm trying to achieve with it when it comes to my dividend income portfolio, but for all intents and purposes, this is a pretty terrible dividend portfolio because of the fact that I barely even hit 1% as a yield. Obviously, yield on cost is a little higher, which is just effectively when those companies raise those dividends, I get that increase without having to purchase any more shares of the company. But yeah, when you take a look at how much I'm earning so far in January of 2022, I'm at 2047, and I think I have one more payout coming, which will actually bump it up pretty significantly. But nonetheless, my averages on this are far below where they could be if I was truly focused only on dividends. But like I mentioned earlier too, with some of the companies that I have, let's go back to the holdings, like Airbnb, Tesla, Google, like, will these companies pay out dividends? I don't know. That could happen in the future. I think if I check this out right over here with like Airbnb as an example, nope, that one didn't do it. Let's see if Google does this. So they'll have this thing here where they'll give you this like hypothetical. So earnings per share, for example. So if Google paid out even just 10% of their earnings, you would get an annual dividend of $10.84 per share, which is about 0.40% yield, which is obviously low. But if they did 60%, which is kind of like that threshold that a lot of companies try to keep around, that would be $65.02 per share that you own, and that would be a dividend yield of $2.40. So hey, if that can be a possibility in the future where Google pays out dividends, that could happen. We just never know. So just something to keep in mind. There was at one point Apple didn't pay out dividends for a good chunk of time, and then they started paying out dividends again. And those people who held those stocks are now getting really good yields because they bought the stock at a really good price point back in the day, and then we're starting to get paid out those extra dividends. So keep that in mind too, that if a company isn't paying dividends at this given time, that doesn't mean that they can't. Let me see if I can look for Apple real quick. So if I go to their dividend history, let's see, 10 years max. So yeah, you can see here. So they started paying out their dividend in August of 2012, and it started out with 9 cents, and now they're doing 22 cents per quarter. So, just imagine if you were buying the stock. Oh, I can't go back 10 years because I have to pay for that. But yeah, imagine going back 10 years and buying the stock. Where was it 10 years ago? Let's see here. So 10 years ago, you were buying the stock at $15.01. So your dividend yield, let's see if we can at least see that. So yield on cost 10 years ago would be 5.74% yield is what you would be getting if you bought the stock 10 years ago. And then if we go even further back in our max yield of cost, this goes pretty crazy just because obviously they weren't paying dividends, and some people just don't buy into companies if they don't pay dividends, and that's okay. And I don't think that's going to actually load for us. Oh, there it goes. Obviously, we're not going to buy it 30 years ago, but if we bought it, so there was 2012 was the 10-year marker. So I mean, if you even go back, back to 2009 or so, like there's a point in 2009, if you bought it, your yield on cost would be 20%. Can you just imagine buying Apple shares at that price in 2009, holding it, and then 15 years later or so, you're actually going to be getting that yield based off of what they have. So again, company wasn't paying out dividends back then, but yet people were still buying, and then those people who held it are now getting paid those dividends every single quarter, and then any increases like they do, you're going to get those increases as well, just for constantly holding that company and earning you more as well too. So I have Apple obviously there, but like I said, like with Google for example, I only have 1.58 shares, which is a little over 1.5 shares. And hopefully, if in the future they do start paying out that dividend, that could be the case. So I'm not saying that that's what I'm hoping for. Obviously, that would be really nice. The idea with these companies, again, if in about 14, 15 years, I want to sell those off, get the profit, and use that profit to go ahead and buy into companies that are paying 4% at that time, and then use that money to live off of or spend however I need to. Or if I don't need the money, I can just leave it in there with those companies and then do what I will. But obviously, I'm sharing that stuff here on the channel to help other creators, or not other creators, help other people who are in the process of trying to build up their dividend portfolio to really see the impact. And let me bring up my video. So this is let's see if I can see myself on here. So this is one of my very first videos on M1 Finance when I earned a dividend. So it's a little cringe-worthy because it's very old. So you can see here that's technically my all-time at the time. I had a total gain of $11.49 with $200 in my portfolio. And I like showing people this kind of stuff. I normally show them on the graph just because it's easy to see, putting a little bit at a time. But I didn't get to where I am now if I didn't start with a small amount. And I know some people probably saw those videos back in the day and were like, $200 really? But for a lot of people, that can be a lot of money. And you can see this was my original portfolio and, being invested with it. And I think, if I'm not mistaken, where was it? If I see here, I think I'm like blocking my own self here. So let me see if I can just put it on mute. I don't want to hear myself. But you can see here, Microsoft had paid me a dividend at the time of 3 cents, which is not a lot. And oops, let me close that off, which is not a lot. But now, they're paying me much higher amounts. And that's kind of what I try to focus on is, increasing the companies that I want to have in my portfolio that I feel are going to be, there for the long term, but then also constantly investing in them, hoping that they increase their dividend yields by a healthy amount. Because if I go here, let's go to Microsoft, and then we're going to do dividends only. So the very first dividend was actually technically the 2 cents, but then the 3 cents was the first video I think I made with it. And then if I switch over here, my most recent one is about $13.07. Now, obviously that's because I put more money into the stock itself, but if we go to seekingalpha.com, I'm going to show you here. Let's see, dividend yield or growth. I think the growth will show me. No, that one won't show me. So let's see if the history goes here. Okay, so they pay out 62 cents a dividend, and then I think when that video came out was somewhere in 2019, we were paying out 46 cents a dividend. So or 46 cents a share. So you can see there's a significant increase just in that small time period. And I think if I go here, I can see what percentages those were. So like most recently, they actually did a increase of 11%, which was from 56 cents to 62 cents. And that's including all the shares I already own at that time. So I don't remember I think I bought some more shares since then, but I have 23 shares. So that extra couple cents per share doesn't seem like a lot now, but as time goes on and we build up a bigger portfolio with Microsoft and other companies, that's just going to help us grow even more. But, is this a great dividend portfolio? Probably not the best one. We'll see how it actually pans out over time. You can obviously be following along so you can see how this changes over time. And that old video is on a different channel, but all my dividend investing and all my investing stuff is here on this main channel now for this one. So that way you can follow along. And I can honestly just really go back and look at for myself and see where I was, the mistakes I made, and maybe the things I did right. And, if that helps you out too, that's always a really great thing as well. One thing I do really want you to do is always keep on learning and growing. I mention that every single time when I do these videos. So what I'm going to do is I'm going to put another video right over here so you can actually continue to grow and learn with your investing. My name is Dennis, and I'll see you in that next video.